Hi, this is Ken Boyd with the Accounting Accidentally website, where you'll find over 300 blog posts on accounting, and if you slide down to the middle of the page, you'll find links to over 400 accounting videos. I'm going to jump over to PowerPoint here and go full screen to talk about profitability ratios. Some of these are very common, others a little more unusual. So we're talking about how much profit are you generating and how do you define it. Some easy ones to start with are net margin, profit divided by revenue. In other words, for every dollar of revenue, how much of that dollar is profit as a percentage. And turnover of assets, or asset turnover ratio, which is for all those assets that you went out and borrowed money for and invested in your business to create, how many dollars do you make in sales for every dollar of assets you use in your business? I always use the example of a plumber driving a $30,000 truck with $20,000 of equipment. So he's invested $50,000 in his business, and the question is, how much in sales is he generating on that $50,000? Asset turnover. Return on investment, pretty basic. I'm going to skip to return on equity, which is return on equity on common stock. So we take net income and we subtract out any preferred stock dividends we pay. That's the amount of income available for common stockholders, divided by average equity, or more commonly, average shares outstanding. So how much do you make per share of common stock? Earnings per share, a very similar calculation. Book value is defined as assets less liabilities, which is thought of as the true value of your business. So a lot of people look at book value per share of common stock. How much book value do you have per common share? And finally, price earnings ratio, which is a common ratio to judge how relatively expensive or inexpensive a stock price is. So it's the common stock price per share divided by earnings per share. So if IBM generates $5 a share in earnings and the company's priced at $50 a share, the price earnings ratio is 10. It's a common measurement to measure overall are prices relatively expensive based on historical averages or relatively cheap. After the 87, the tech crash in the early 2000s, you had price earnings ratios that were fairly low, down around 10 or 12 times on average for large stocks. When you're near an all-time market high like we are now, you may have the average price ratio for large stocks at 25 or 30 times earnings. So those are some profitability ratios. And remember, as I jump back over here to the web, on the conference room site, you'll see an article about 25 intermediate accounting spreadsheets, a new book that I'm writing that you can get sample chapters for that will take a textbook, spreadsheets that I use in my YouTube videos, and the YouTube videos, the links themselves, and combining them all into a book. It'll look something like this. And if you'd like sample chapters, you can go to ken@stltest.net and email me to receive sample chapters. Thanks very much, and we'll see you next time.